Wow, what a day. The Indian stock market just took a major nosedive today, completely snapping its recent winning streak. So let's get into it and unpack what really happened. We're going to look at the shocking AI news that started the sell-off, the global storm that was already brewing, and of course, what it all means for you.
Yeah, the numbers, they tell a pretty brutal story. The BSE Sensex plunged more than 1,000 points in just one session. Now, this wasn't just a little dip. This was a massive, sharp drop that wiped out all the recent gains and sent a real shockwave across the market.
So if you peeked at your portfolio today and just saw a sea of red, yeah, you are definitely not alone. The big question on everyone's mind is why? What caused this? Was it just a random bad day, or are there some much bigger forces at play here? Let's break it all down.
All right, so where did this earthquake start? Well, the epicenter, it was squarely in the information technology sector. This wasn't just a case of the whole market going down together. Nope, something very specific really spooked tech investors.
I mean, just look at this. The difference is absolutely staggering. The overall Nifty 50 index, yeah, it was down about 1.1%. But the Nifty IT index, it didn't just fall, it cratered. It was down a massive 4.74%. That is not a ripple, my friends. That is a tidal wave hitting one specific corner of the market.
So what was the trigger? You might be surprised. It all came down to a single announcement from an AI startup you may not have even heard of, called Anthropic. They pulled the curtain back on a new tool called Claude Code. And somehow, this one piece of news was enough to start a multi-billion-dollar sell-off. But why? Okay, to understand this, we need to talk about something called legacy systems. Think of it like the old, creaky, but absolutely essential plumbing inside a giant skyscraper. It's ancient, but without it, the whole building stops working. And our big Indian IT giants, they're the master plumbers who get paid a fortune to maintain and fix that old, complicated system.
And this is where the fear kicks in. That new AI tool, Claude Code, basically promises to be a robot plumber that can do the job faster, cheaper, and maybe even better. All of a sudden, that huge, stable, reliable source of income for giants like TCS, Infosys, and Wipro, it looks like it's under a massive threat from artificial intelligence.
But here's the thing, that AI bombshell, it didn't just land in a calm, happy market. No, it landed right in the middle of a perfect storm of other problems that were brewing all around the world. Just look at the timing here. It was one thing right after another. You have a U.S. Supreme Court ruling on tariffs, then bam, President Trump signals a tough new global tariff. And while all of that is happening, nuclear talks with Iran hit a wall, and you start hearing more and more chatter about military action. This is exactly the kind of stuff that makes investors nervous and has them running for the exits.
So you've got all these pressures hitting at once. Tariff threats create uncertainty, global tensions are pushing oil prices way up, and of course, all of that puts pressure on the Indian rupee. It's like the market is getting hit from every direction at the same time.
And let's be clear, this 15% figure, it's a really big deal. This isn't just a small tax on one or two products, it's a huge tariff on basically everything, which could throw a massive wrench in global trade. And for a country like India that exports a lot, that's just plain bad news.
And then there's oil. For India, a country that has to import most of its oil, this number is just pure pain. Oil at over $72 a barrel means everything gets more expensive. Fuel, transportation, manufacturing costs, you name it. It's a direct hit to the economy.
And here's how that all connects. When global investors get nervous, they pull their money out of places like India and pile it into the safety of the US dollar. That makes our rupee weaker. And a weaker rupee means that oil we have to import, well, it just got even more expensive. You see, it's a nasty, vicious cycle.
Okay, but even on a day that looked like a total bloodbath, it wasn't all bad news. Believe it or not, if you look a little closer, there were actually some big winners today. It's a classic tale of two completely different markets. I mean, the contrast here is just incredible. On one hand, you have the IT sector getting absolutely hammered, crushed by those AI fears and hitting its lowest point in 2.5 years. And on the other hand, the metal sector was on fire, hitting a brand new all-time high. So money wasn't just leaving the market, it was moving.
And you can see it right here in the company names. The losers list, it reads like a who's who of Indian tech. Tech Mahindra, HCL, Infosys, Wipro. But you look at the gainers, and you've got your big metal players like Tata Steel and JSW Steel, and also some classic defensive stocks like HUL and Power Grid
that people run to when they're scared.
All right, so after a day like today, the big question is, what now? Where do we go from here? Let's talk about a few key things you're going to want to keep an eye on.
Okay, for all the chart watchers out there, this is a big one. The Nifty closed just below its 100-day moving average. Now, for traders, that's one of those key lines in the sand. Closing below it is often a warning sign that the short-term trend has soured.
So, what's the next number everyone is watching? 25,200. That's seen as the next big floor, or support level. If the market can hold at that level, it could be a good sign. But if it breaks below, well, we could be in for another rough ride down.
So what's the takeaway here? Well, the number one rule in a crash is usually don't panic. Don't sell just because everyone else is scared. Instead, it's about being smart. Keep an eye on those key technical levels we just talked about and pay close attention to the next big piece of economic news.
And we don't have to wait long for that. This Friday, we get the GDP figures, and that's going to give us a real hard snapshot of how the Indian economy is actually doing. A strong number could be exactly what the market needs to calm down. A weak one, though, could just pour gasoline on the fire.
Which leaves us with the big final question. Was today just a freak accident, a perfect storm of bad news that'll blow over and be forgotten next week, or are we witnessing something much, much bigger? Is this the first real tremor of a new AI-driven era where entire industries can be turned upside down practically overnight? It really makes you think about the future.